All right. Good morning. It's 8 a.m., October 23rd. This is Vince Lanci with the AM Gold Fix. Been off the last couple days. It's good to be back. And I'm walking into a little bit of a whirlwind here. Stocks have been soft for the last couple days. The gold market is very strong today. I wanted to focus on today something called flow trading, which is becoming more and more important, especially if you're looking for active trades in gold, because it seems to me that a lot of the moves are happening at night, whether up or down. And then the American hours are becoming less tradable, even if you have a big range in a 24-hour market. We'll get into the drivers of gold last night. Obviously, equities are at the top of that, so we have to touch on the drivers of that. The FX market, and we'll talk about levels in gold to trade today. I don't have any strong signals on. Actually, I have no signals on my system, on my brown box, we'll call it. But there are technical levels to pay attention to. We'll be sharing those with you. And let's get started with where most markets are now. If you go to, if you're on a phone or you're on a computer, if you go to the insight section, there are the top two stories are the overnight recap, which is put out by OpTrader every morning and in your mailbox if you're a subscriber. And this morning, every morning that I'm broadcasting now is we'll throw out a couple charts for the gold fix so you can follow along until I get my technological disadvantage removed. I am on the road today. I was told by Larry to come to Florida. It's warmer. I'm in Connecticut. I'm in Pennsylvania today. And, he said it will be warmer, but it's not. Maybe I have to keep going south until I'm in Florida. But I moved into the cold weather in Pennsylvania. It's kind of sad. No, I'm just playing dumb. Okay, before we get into the notes, turn your attention to the screen. You can have that open, Gold Fix with Vince Lanci, and or the overnight recap in separate windows for things to refer to. I want to go to the markets in themselves to get a reference of where we are. Okay, we're going to start with the FX. Actually, let's start with the equities because they are the movers today. And then we can look and see, along with gold, then we can look and see what the currencies are, if any, showing any direct correlation. All right, so I'm going to look at indices, right, and commodities and the 10-year bond. Now, the first time I looked at this was about 1, 2 in the morning, and it was without reading news. So as an active trader, I look at the market, I look for correlations, I look for relationships, and if I can't find anything strong, I start to come up with reasons for the market being up or down. And then I look for news to see if the news confirms or contradicts. And then I ask myself, is the news itself being honest? So I don't look for the news for correlations. I look for the news for information. And then I determine what correlations I'm going to pay attention to. All right. So I'm up in the morning, actually about 2 o'clock Eastern time. And I noticed that Shanghai Composite is down. I did the stock market closed extremely weak yesterday. And on the reopen, it kept selling off. Apparently, whatever China did or did not do, this is me before I'm reading, whatever China did or did not do did not help U.S. equities. My guess is earnings came out after hours. This is me guessing before I'm reading. My guess is more earnings came out after hours that probably reignited the sell-off post hours. This is me looking at a chart. And whatever the problem is, whether you want to call it contagion or coincidence, U.S. closes very weakly. Asia opens and it's weaker. Ignore the FX side. That's a U.S. traded ETF. It's on Asia, but it opens trades on U.S. hours. The Nikkei is down. So now we're looking right here, right? First of all, starting from top down, the 10-year bond yield is down, right? So someone's buying bonds. Okay, so let's look at what's going on in stocks. All right, Shanghai Composite is down a powerful 2%, trading 25.94. NY1, that's the Nikkei. The Nikkei 225 is down 2.5%, 2.6%. And the DAX, which is down now, so it spreads from Asia to Europe, and Europe is down. And every region will have its own reasons for being down. I'm sure I'll read, but if you look at it in a macro part away, you're starting to see a consistency, whether it be an economic cycle turn, whether it be earnings coming out showing that, whether it be monetary policy, things are starting to move all at once. How long will that go? We don't know. All right, so the FXXPI, that's the stock 600, down 1.17%. All right, so basically what you're looking at here is stocks are down across the board. You get to the United States and the NASDAQ, E-mini and Dow futures are all down. 1.5 for the Dow, 1.6. NASDAQ trading 70.41.5 futures. And the E-mini is 27.20 on the future side, according to my settlement system, down 1.3% at the moment. So if you look between the Dow, the NASDAQ, and the E-mini, sometimes you'll see, I'm looking at now, I'm still thinking in the morning, I'm going, all right, well, is the NASDAQ down a lot more than the S&P or the ES? No. Usually, when there's a sell-off, the Nasdaq is worse. But Larry did make a note last night. I think one of the last things he said was the Nasdaq was acting funny. Look for the ES to be lower, and lo and behold, the ES was lower. And I guess the Nasdaq was a clue for him. He saw a connection there before he shut down for the day. But if you look at those three indices on the U.S. side, all three of them are down about the same amount. Right? The VIX is up 20%, which basically means it went from 19.5 to or 20% to 22%, or 21% to 23.7%, something like that. Okay, oil. Getting to the major commodities, oil is down. Brent and WTI are both down significantly. In fact, this is the first day in a couple of days that it's not a WTI-based leading lower move. Both markets are down, consistent in price. The spread is around $10, whereas at one point it was as high as 11. Natural gas is up, bucking the trend. The U.S. dollar, which started the day when I first looked at this, unchanged, mixed, slightly lower, is now seeming to pick up a little bit of steam below 96, so it's down 0.18, almost 0.2%. But looking at the major pairs, I'm going to just spare you the aggravation of this, there is no major pair that is driving the dollar today, except for the dollar yen. The dollar yen, all right, that's the monthly chart. Let's look at this one, the hourly chart, so you can get a feel for it. The yen has been lower or stronger against the dollar. And gold is now rallying with the yen getting stronger. So there's a possible recoupling with the yen, but I'm not going to be married to that idea, but I'm paying attention to it. So why is gold up 1.37%? Why is gold trading 1242? And with the absence of currency pairs and the stock market down, whether you believe it or not, somebody is buying gold for some reason, either because they need to buy gold because it's gold, or they want to put some sort of a hedge on for the stock market, flight to safety. And the headlines today you will be reading you could probably be reading would be flight to safety. Bonds are up and gold is up. But we were told a couple weeks ago that correlation this, correlation that. Look, gold is up, I think, all right, today with a mildly lower dollar. Gold is up because there are too many shorts in the market without any fresh money coming in to sell to bail them out. And the middle of the week last week saw a big increase in short open interest, which people were saying is bullish, is bearish. It's nothing until the market starts moving. And right now we know that the weaker hands, considering that the dollar is doing very little of anything, and gold is not a hedge for a stock sell-off in the short term. I mean, you may be making money trading today, but I think it's a mistake to correlate that with stocks in the short term. But I do think that if you're a short and a weak short, and I think there's a lot of weak shorts out there right now, a rally in the stock market, especially if you're long stocks, is a good reason to cover shorts. I think we're in the middle of a more extended short covering rally. We wrote a story about that last week. We published a story last week about that, or yesterday, I should say, entitled, I think, The Gold Short Covering Rally, Is That All You Got? And certainly seemed like the gold short covering rally was over and the rally was stagnant, because if you look at the market on a daily basis, all right, we had about 5 or 6 days of choppy sideways movement, and those long wicks above on the daily charts for the last 5 or 6 days, they would give the indication that there's selling up there that's chasing the market, and that would be bearish. But once you get above them, that means the selling is done. And lo and behold, we're above them, and the market ran a little bit. Okay, uh, let's go to let's go to post the story. Okay, we can go through the charts, make you a little bit less roller coaster nauseous. All right, I'll go sideways to help your view. All right, why don't we start with a pattern that I'm noticing that's real, that's legitimate, and I don't know how long it's going to last, and I don't know how to make it profitable because it's not happening during hours that I'm normally trading, but it certainly is a pattern. It's a flow pattern. Gold tends to come in orders tend to come in chunks. You may get an order to buy, however many thousand, 5,000, 10,000 contracts, whatever, and it may be done over a 5 or 6 or 7 or 10 day period. So I want you to notice. Actually, there's one that I missed, but there are 5 ellipses, circles, and they all coincide in the area. We're looking at, what is this, the 4 hour? This is the 4 hour. It's actually the worst chart to start with, but we're doing anyway. I first noticed between 12 and 4 a.m., gold would pick a direction. And I noticed this like on the 11th. I only went back, I think, to the 12th, to the 16th, to the 16th. Okay. So start with the first ellipse on the left. On the 16th, 16 at the bottom, between 12 and 4 in the morning, gold picks a direction up. Now, I'm not saying that gold always picks a direction up. I'm just saying gold picks a direction during that time. Okay. Between 12 and 4 in the morning on the 17th, gold picks a direction up. Between on the 18th, gold picks a direction down, rejects it, and ends up leaving a long tail. So there was an order that came in. I believe you now have 3 in a row. Call it a serial buyer who's buying between 12 and 4 in the morning. And if you look on the next day, which is the 19th, you will see. Let's make this a little bit bigger and get the noise out of the way. You will see you have another candle with a long wick below, and you could say, but it's red, and I would say to you that's true. But the market started at one point, went lower, left a long tail. I reiterate, I frequently say long tails to me are a sign of either trapped order flow or order flow that's not going away. Either it's a brick, you're not getting through it until it's filled, or it's a market if touch type of order. So, so actually, we are seeing a buy pattern looking at this. So on the 16th, 17th, 18th, and 19th, the market shows a buy order, not necessarily higher in every candle, but it shows a buy order in the market. Okay. And then we go to the 22nd, right, which I did not circle. I should have, but you have a down. I should have circled that. You have a serious move lower, picking a direction lower. So I'm not saying the market goes higher between 12 and 4, but the pattern for me is an uh, order flow comes in between 12 and 4. So that's during London hours. So that could be an increased liquidity moment for an Asian order. It could be a U.S. moment where the liquidity increases because London is an increase in liquidity. It could just be European buying on Brexit or whoever cares the reason. And so today, the 23rd, having already circled it in the morning, it looks kind of weird now. It was a sloppy circle. It was very dark. But the 23rd, there you have it. There's the order flow coming in, and you could see it. Now, if you go back before the first ellipse to the 15th, which I didn't circle, again, between 12 and 4 in the morning, gold picked a direction higher. Now, we're not going to belabor that. What we're going to do is we're going to take this and we're going to say, all right, let's look a little deeper and see if we can find the pattern, how it breaks down in hours. So if you go to the next chart and we look to hours, you look at the first ellipse, right? 12 is where the vertical line is on the chart. All right. So on the first day, you start lower, you finish higher in that 4 hour time period. On the second day, you start higher, you go a little lower, you finish higher. On the third day, you start lower, you finish higher. The ellipses aren't perfect, but you can see what I'm looking at. On the fourth day, you start a little higher, then you dive lower, and then you finish higher. Again, on the next day, you just open lower and you keep going lower. And today you open higher and you keep going higher. I would say that conjecture, but as a flow trader, on the first 3 days, you had order flow come in the first minute of 1 a.m. or the first minute of 2 a.m. And on the fourth day, you had the order flow either be filled or get a little sexy and wait for the market to dip to be bought. And on the fourth day, it sounds to me like there was no buy order at all, and the sellers pushed it to see if there was any buying. There was none, and they got their way. And you can see what happened. And if you look in between those ellipses during U.S. hours, what do you get? Uh, uh, it, for this 5 day period, I see sideways to lower, sideways to lower, sideways to lower, sideways to a little higher. In fact, yesterday was sideways to finishing strong, and today we exploded. So what we're looking at here is if you were trading on an hourly basis, you would be paying attention between 1 and 4, and you would definitely have opportunities for swing trading. But if you're an American and you like to sleep and you have a family, and you are an active trader, you'll end up trading stocks or or something gold based, than getting up at 2 in the morning. Uh, if you trade like fund managers do or macro fund managers do, you sleep when you can, not when you have to. So that's what we're here for. We're here to help you out. And it's making gold difficult to trade when the big moves are happening while we're sleeping. So, which brings us to how are we going to trade this today? And frankly, uh, I have nothing on my radar that allows me to say we're near the top or we're near the bottom. But I do have good technician numbers, and I'm going to share them with you and tell you how I feel about them. The ones highlighted are the ones that are important to me. All right. So the market is currently trading at. Let's put this up here. Let's put this up again. All right. All right. The market is trading very strong. Right. Uh, uh, I have said often in the past, maybe not often here, but often in the past, that net on a very, very, very macro basis, the United States citizenry is liquidating gold to buy bread because any baby boomer who doesn't have money is going to be liquidating savings to live. And the newly minted middle class in Asia, specifically in China, will be buying gold. So if you look at it in a very simplistic fashion, buy gold in Asia or buy gold on the dip in America and sell gold to in Asia to Asians. But the flow trader would say buy gold at the Chinese Open and sell gold at the American Open. But the investor will be buy gold at the American close and don't sell it until you want to sell it years from now. I use that word investor loosely. So the number 60, we're at a 60-minute chart, and gold looks like it's pulling off of a high, leaving a wick, getting after coming close to 1244. I have nothing on my radar as we had our signal breakouts at on the 23rd at 12 and 1 a.m. I had no orders in because, again, it's not a system that I can just turn on and walk away from. It is a system that definitely has subjectivity involved in it. Let's see. I'm actually looking at a question from Sunil. Okay, that's for Larry. Okay, he's talking about volatility, which I would love to talk about, but we're not going to do that right now. All right, so let's go through. Now that we know where gold is trading 1241, got as high as 1243. Let's see what we have on the technical side for active traders. Personally, before I even look at these numbers, before I even discuss these numbers, it had been my feeling that above 1237 was a buy, but that no longer was a system number. So now let's see. If you're already long, I would say you want to be looking to sell now with a possible extension up to 1255. All right. Actually, before we get into technicals, I want to share something with you that I said before that's very important. Many CTAs, who are the people who are basically the replacement for stockbrokers managing high net worth individuals' monies, uh, uh, as opposed to, in addition to mutual fund money, have been short gold since above 1250. I believe that there are stops in the 1250 area, conveniently a round number. And I believe, based on information and experience, that CTAs will be covering for their clients' books in the 1250 area if we get there. Am I saying to get long at 1250? Well, I am saying if you are long and you have size to get off, like a Jeff Gundlach or a George Soros, you would be looking for exit liquidity. And if there are stops, and let's say there are stops at 1250. massive stops, and the market goes to 1251 and starts to go lower, don't get married to the bullish idea. That can mean that those stops had was a level for longs to get out, a liquidity event. Let's look at the technical numbers here. All right, first I have 1243 since we're in between these areas. So if you are long already, 1243 to 45, according to Michael Moore, is a level to consider taking profits. Above that, I don't have 1247 to 1250, but that does make sense if I believe that there's stops from 1247 to 1250. I think we get above 1250, you'll see some gyrations, weekends to strong hands, I call it. I think dips are safe to buy using these numbers. 1235, if you want to trade it today, below 1235, you're going to end up, I think, having a problem and possibly a retracement. Uh, there's really not a lot of active trading to do in gold today. On the way, I think the action, if you're an active trader who only trades gold, it's going to be a rough day for you. I think possibly I would be looking at 15-minute and 30-minute charts as opposed to hourly charts and 4-hour charts. And I would have to actually let the market breathe, use smaller positions, and I would be trading wider stops today, not because it's so volatile, but because the technical numbers are really so wide. You know, we had $10 ranges on average last week. Now we're looking at a $6 range on average until today. But we are seeing an increase in general in volatility. And if you remember on the monthly chart, which I refer to, we're in a what I think is going to be a violent reversal. I'll throw some numbers at you. Uh, if we stabilize here and get above 1250 and don't get rejected, 1260, 1275 is easily on the table. I think the goal for this move, if it continues, again, a technical analyst talks this way. The goal for this move, I would be very happy and surprised if it got above 1330, but 1330 is a real number for me on my system, but it's very macro. Why don't we uh, uh, wrap this up very soon? It's 8:23. Unfortunately, it's not a very exciting, but I do want to make a comment about this. Michael Moore was kind enough, since we are all looking at stock market uh, activity. He has a note in here on the S&P. I asked him again to do that for us, and he did that. And where is that note? Uh, okay. I don't see it in the chart, but I do know that he did it. So I think this is worth doing. So why don't we just do this? Why don't we find that? Here we go. Okay, note, S&P traders, active traders who realize that there's not much to do today in gold. The S&P 500 is currently testing below a major formation, the breakdown line of which comes in at 2721 today. If we break below here by 11 points today, this will project a downward 100-point minimum, 345-point maximum. So he's talking in handles. The maximum could be seen in as little as 11 trading days. This is where Michael shines. Macro moves, he calls very well. If we break below by 11 points and back above by 11 points, this should see decent renewed strength to come in for days. Take a look at that. I want you to look at Michael's number. We're not being compensated for this. If you want to consider subscribing, he doesn't do the stock market in general, but I've asked him to throw a couple notes in here and there for our audience, and he's been very kind to do that. So the breakdown below 2721 projects, okay, this is insane, projects 100 handle, 100 move lower. Uh, uh, I think that's what he's saying. He's got his decimals a little bit differently than I do because he's very oil oriented. Well, there you go. You've even got a oil and gold technician paying very close attention to the stock market. Have a great day and stay with us for the 8:30 a.m. roadmap. And I'll be uh, joining Larry, who has been very active and almost put me in the hospital because he uh, made like 10 or 20 handles on the long side in the S&P, and it kind of confused me a little bit. But there you have it. That's day trading. You got to be able to trade both sides, and you have to be, I think the word is nimble that we've used. Have a great day and good luck.